Welcome back to the Tradehacker Mindset podcast. In this episode, I want to talk to you about adapting your trading.
Trading the markets can be difficult to master and seemingly just out of reach. Professional traders have a secret. Trading requires total mental and emotional control. It requires the Tradehacker Mindset.
All right, so let's jump into this topic about adapting your trading. So at the time of this recording, it is the first week of February 2025. And what we are experiencing from a market environment so far in the first, call it 5 weeks of the year, is much different than the environment that we were experiencing especially at the end of 2024 and really kind of throughout 2024. And the biggest thing is the new administration, right? There are a lot of executive orders being issued. There's a lot of tariff talk right now, and every just minute piece of information that hits the wire based on these different economic and geopolitical issues, everything that hits the wire moves the market. This week specifically, just as an example, a note came out on Financial Juice is the news source that I use for kind of up-to-date news and what's going on. And the post was simply, I think it came from the Wall Street Journal or some other source, and it just said, Trump will not be meeting with Xi today. Right, the president of China. So there was a potential that they were going to meet, and the post was that they weren't going to meet today, and the market, SPX immediately moved 15 to 20 points. And so all of these little things, if you're trying, let's say you're trying to trade delta neutral, zero DTE strategies, and that's all you do. And that's all you did in 2024. And you did really, really well. Being able to do the same thing that you did in 2024 in this environment is not going to work out the same. So you have to be able to adapt your trading. And here are a couple ways that you can adapt. Number one, you can position size smaller. Position sizing smaller can be the remedy for so many issues with trading that if all else fails, downsize your position. Okay, so that's one thing, right? And what'll happen eventually, what always happens is that the options or the market starts pricing in and getting used to these random things that come out, and it'll start to price things in a lot better, right? The tariff talks right now, at the time of this recording, the big thing is 25% tariffs on Mexico and 25% tariffs on Canada, and they just got paused for 30 days till they work things out. So this is all kind of fresh and new from the market's perspective. So the reactions are faster and larger. But as we progress through and the market and the options market starts to price in tariff talk, these moves are going to become less and less violent or cease to exist at all at some point, just because it'll already be kind of priced in. Now, there's always going to be surprises. And the markets are priced based on all known information right now. But there are always surprises. Okay, so it's not that, the market's going to price it in to a point where we're not going to have random moves. That's not what I'm saying. But on specific topics, the market will start to price in the options around that information for what is known right now, and specifically to, certain topics. Think about this. think about when, we had interest rates basically at zero for several years, right? And then as soon as the interest rates started going up, every single little tiny piece of news around interest rates was a huge market mover. And at any time one of the Fed committee members opened their mouths, the markets would move, right? So if you were trading during that time, that you had to keep an eye on the Fed speakers, and if there's anyone scheduled, or if they, all of a sudden had an impromptu interview on CNBC, like you had to kind of be aware of those things to make sure that you were positioned correctly around those, or had lack of positions in some cases around those types of events, right? And now, so that was, that was the hottest thing. Like, you had to watch the Fed speakers. But now we don't even pay attention to when Fed speakers are scheduled, for the most part. At least I don't, because they're yesterday's news. And the market is most worried or most concerned about the now and the future. Okay, what's happening right now, what's most important right now, and what is it perceived to be happening in the near future. And so right now, that's tariff talk. Right now, that are some of these other executive orders that the Trump administration are trying to implement. And these are all changes into what we've seen recently, and so the market's reactions are quicker and more violent in a lot of these cases, right? So, adapting your trading. So I already mentioned one solution is obviously to downsize your positions until the market starts to reprice these options around these different geopolitical issues and kind of moves past those. Okay, so that's one thing. Number two, you can change your strategy, right? Just because you think of yourself as a 0 DTE iron condor trader doesn't mean you have to pigeonhole yourself into being a 0 DTE iron condor trader, right? So, one thing I've been talking to our community, since the end of last year and into the beginning of this year, that I said, this is going to be the year of the Rick, right? The year of the reverse iron condor, meaning, you put it on and you actually want the market to move, and that's how you'd benefit. And we've certainly seen it come true. Now, you still have to time those right so that you don't get that premium decay working against you too much. But we've certainly seen a lot of situations where these reverse iron condors have paid off nicely, because everything's just kind of moving along, and then boom, out of nowhere, seemingly, the market makes a quick move. And if you're selling premium, you're probably feeling the pain of that. If you're buying the premium, you're liking what you're seeing, right? So that's another way is looking at, okay, what strategy, really, it's really about zooming out and looking at it from a perspective of, okay, the strategy I was trading before isn't working. So if that's not working, if I do the opposite, will that work? So that's one perspective. And with options spreads, it doesn't always work like that, right? You could have one strategy and the opposite strategy, and they could both work, or they could both not work. So it's not just flip it over and go to town, but using that perspective of, okay, what I was doing isn't working. Based on what's going on in the current market environment, what could I be doing that might work? And then you can start doing some testing, right? Then you can start doing some paper trading, and you can start trading with a 1 or 2 lot, and you can start doing some back testing and look at different market environments that may have been similar to the environment that we're in right now, to see what would have worked back then, or what was working back then, and how you can translate that into what you might be able to implement into your trading to work right now. Okay, so those are a couple of the things that I'm doing. Now, just on this specific example that I was giving, I'm still selling 0 DTE premium. Okay, I'm just doing it a little bit differently. I'm just being a little bit more selective on my entries. I'm not just simply using a scheduled, time to enter each day based on the fit criteria. I'm being a little bit more, looking at what's going on, if there's any scheduled events, if there's a potential. Sometimes there's a potential for an event, right? There's a potential for a White House press conference. There's a potential for a conversation that Trump is having with another president of another country, right? There's all these different things. And so it's as traders, all we are is risk managers, right? So it's all about weighing the risk. Am I okay with the risk I'm putting on based on these factors that I know of at this specific time? And that's all you can do, right? And you're putting on strategies that you perceive, or you have from testing and back testing, that you perceive have an edge at the time that you put them on. And that's all you can really do as a trader. That's what you should be doing for every single trade, is analyzing what's the risk of putting this on. If this goes to my loss point, am I okay losing that amount? Do I feel like I have an edge? Those are the things that you should be thinking about as you analyze putting on trades or setting up your trade plan for putting on trades. The other thing that I'm doing a little bit differently is I was doing this more and more into the end of 2024, but really it's becoming more and more a core part of my trading, and that is just directional day trading. So I'm primarily, a lot of my 0 DTE, delta neutral stuff, all that is typically on SPX, but I'm doing a lot of directional day trading on stocks, and simply just buying puts and calls on stocks using very specific criteria to trade direction. And that's also a pretty cool way to refocus my attention, refocus my trading, because I'm not, I don't have as much of an emphasis on the short premium 0 and 1 DTE stuff. So shifting a little bit more of my focus on directional trading has been great. And here's the other thing. If you're trading directionally, one of the toughest environments to trade directionally is low volatility, right? When you get markets that are just grinding sideways and, little up, little down, and just kind of little two-sided action. I mean, that's the absolute worst environment to be day trading in. When you're day trading directionally, you want volatility, right? You want those big sweeping moves. You want those big, one directional trend days. You want those big moves in the market. And so that's another form of adapting your trading, right? Don't try to just continue to shove a square peg into a round hole and hope that it fits, and keep forcing it and trying to fit because that's how you did it before. You have to be able to adapt your trading. So if the market is volatile and you're having big swings, look at different premium buying type strategies. Okay? If you're in a situation where maybe premiums have been high but things are starting to calm down, that's the best time to be selling premium. So it's really important. I think a lot of times, and I'm a victim of this too, is that, okay, I've got my back test. This is how it's performed. I'm going to follow my back test to a T. I've got my criteria. It fits today, so I'm going to trade it, by golly. Right? Like, I think that's kind of the mindset that a lot of us get into, because part of it's a good thing. Like, part of it is we set up this back test. We found this criteria that we're comfortable with. It aligns with our beliefs around the market. And we know that following the plan and following the back test typically outperforms us making little judgments intraday, right? Or intra-trade, right? How many times have you taken a trade based on a back test, and then mid-trade you decided to fiddle with it and do something different, and had you just let it do what the back test told you to do, it would have performed better, right? I mean, how many times have you found yourself in that position? Tens, dozens, hundreds? I know it's a lot of times for me. So there's a fine line of following the back test or following your trade plan and adapting your trade plan to the current market environment, right? Those are a couple kind of totally different things, but there is some gray area too, right? If you have a Venn diagram, there is some overlapping areas in those two scenarios. So it's important to, I think the biggest thing is it's important to understand that, right? It's important to see both perspectives and just be honest with yourself about what you're doing. Are you just tinkering because you're bored and you have this gut feeling that the market's going to do something, so you're going to do something other than what the backtest says? Or have you adapted your trade plan for the day, for the month, for the week, however often you game plan, right? For me, I put out my trade plan once a month, and I follow that trade plan pretty closely, but I also have micro trade plans every week and every day, right? So if it's FOMC week, right, there's a Fed meeting on Wednesday. Well, I'm not going to trade my normal Wednesday strategies on a Fed day. Okay, that would be silly, right? That would be not profitable. That would not be the way to go. So I have my monthly trade plan. I also look ahead for the week, when I'm doing my planning on Sunday night or Monday morning, and I'm seeing what's going on. What economic news events are scheduled? What big stocks have earnings? What else might be out there that I need to be aware of? Okay, and so I'm kind of then adjusting my monthly trade plan into what I'm going to do for the week out of my monthly trade plan. And then each day, each morning, as I'm doing my morning prep, I'm adapting to what my trade plan is going to be for that specific day. So, for example, if I've got my trade plan for the month, I've got my plan for the week, and then I wake up one morning and S&P futures are down 100 points. Am I going to say, no big deal, I'm just going to stick with the plan? No, I'm not. I'm going to have a new plan. Like, for example, something I might do to adapt that has done really well for me over the last, 4 or 5 months is my British Iron Condor strategy, which I typically have. I have tranches, kind of automated firing throughout the day on scheduled times. If the S&P is down 100 points, if the S&P is down 1%, or something happened overnight, I'm going to pause my morning tranches so that when the market opens, I'm going to have more of a wait and see plan to watch price action, see how things react, see how the market absorbs the new information that just came in overnight, and then implement a plan from there based on the price action that I'm seeing. Okay, and that's worked really well. When I compare my British Iron Condor strategy and my performance every single month since I've been trading it, I've done better than the back test by making those adaptations, by adapting to the current market environment and understanding the risks involved, and then making the decision of whether I want to take that risk or if I think the risk is too great and I don't have an edge. And I want to just continue to always be putting on risk, putting on potential winners when I feel like I have an edge. And that's part of adapting your trading to the current market environment. So I hope that helps. I think a lot of people in our community are of the same mindset I am, from a perspective of what's going on. But, I've jumped, I don't do this very often, but I jumped on social media, on Twitter, X, and, just kind of scrolling through some of the trading, or hopped in a couple of Facebook groups, and man, the amount of complaining and, oh my God, Trump this, Trump that, and oh, he's killing my trade. Well, adapt, right? You can't control what other people do. The only thing that you can control is pushing the button to enter a trade. The only other thing you can control is the amount of risk that you're putting on. And so if you're trying to do the same thing in this environment that you were previously, it's just not going to work. And why would you think it would? Do you really think that you can come up with a strategy that you can just do day in, day out, regardless of the market environment? Low volatility, do the same thing. High volatility, do the same thing. Big gaps in the market, do the same. It doesn't work like that, right? You have to adapt your trading, and you have to understand the environment of what you're dealing with, and then tailor your trade plan to that market environment. That's the only way to do it. We all wish it was easier, right? I think we all wish there was an easy button, that I could just find this one strategy that I could just automate and I wouldn't have to do anything else, right? We've all wished that before, but that's not real life, right? That's just not how trading works. And so we have to get out of that mindset that that's even a possibility. It's an illusion. It's a mirage. It's like when you're walking through the desert and you see water. It doesn't exist. So get it out of your mind. Just realize that it does not exist, and you have to continue to adapt your trading based on what's going on. All right. Hopefully that helps. If you guys have any questions, let me know. Until next time, I will see you on the next episode. Cheers.